Yo, what's going on YouTube? Jay Clem back with another video, and today we are going to be going over manipulation, how to avoid being manipulated in the market, how you can use manipulation to your advantage, and basically where to look for manipulations and where they happen a lot of the time. So just a simple schematic here. Obviously, right, so let's say we've got our simple uptrend, right? But this isn't like how they happen in the live markets, if that makes sense. Usually, right, we'll have a big impulse, we'll consolidate, right, we'll manipulate a load of traders, then we'll pull back, right, then we'll manipulate a load of traders again here, create that higher low, and repeat the process, right, something along the lines of this, right? See, there's that manipulation happening somewhere, like something like this, right? This is more so how the live markets happen, right? Now, we can use this to our advantage because we know when to stay out of the market and we know when to get in the market. We know when we can look to take those counter trend trades, for example, after we see that manipulation, to then obviously target back in our previous structural range to catch that pro trend move for the big swings. So that's basically going to be the premise of this video. Now, looking at euro dollar here, you can see, right, we are clearly in a downtrend. So we have our lower low, lower high, lower low. We break bullish. Obviously, we've got break of structure here, break of structure here. We go back bearish here, confirming obviously that we are in that bearish market phase. Now, let's assume we are in a trade from this supply level, and we're running, let's say, and you're 300 odd pips up, right? Now, you don't want to pull partials because obviously this trade has, excuse me, you don't want to pull partials because obviously this trade has big potential to obviously take this low, but obviously you want to protect that by hedging it, because obviously this is a considerable push here, 460 odd pips. So like you can see here, right, we have that manipulation happening, that consolidation in the market. Take the low, take the high, right, we take the low again. So you're thinking, okay, I can see this manipulation happening around this demand level here, around this wick. Now, usually, right, we know that this manipulation happens at reversal points in the market before the market changes direction, right? We see it all the time. Look, we're downtrending, right? We have this large manipulation here and we shift the trend again, right? Look, we see it again here, that large manipulation, we shift the trend. This whole thing here is also manipulation, right? And, before we obviously get that shift in trend, we see it all the time. So it's good to, and obviously when you see it on the higher time frames, something like the 4 hour and the daily, we know that obviously there's a big move about to happen, right? So again, you see it here. Although this is like mid swing range, if that makes sense, not at like a reversal point, we are still obviously here. We have that bullish phase because we broke structure here, and we're expecting at this point a higher low to form and give us that higher high, but we don't get that, right? Because what the market ends up doing is giving us this consolidation, manipulation around here, and then taking the low, giving us that bearish break of structure. So we know, right, when we see this, that we can assume there's a big move coming, either a continuation, bearish, or we're going to pop the high here and something like this, right? So let's say, look, that you've got this demand level here and you're thinking, okay, if I give an entry signal, I'm happy to, take my long to hedge, obviously the short that you're in here. So let's just play price forward. So we absolutely obliterate this demand level. And now you're thinking, oh, great, like I don't need to take the hedge. We're definitely going to come down and take this low. Well, steady on there, guys, because look, straight after we run this high. Perfect example of that manipulation, right? We take the low, we take the high, we take the low, and then we take the high again. So we can really see this is just, the institutions and the banks stacking those orders, and then they finally give us that intended direction. So don't fret, obviously, when this happens. Like, you can take those counter trend trades to obviously go long, right? Now, obviously, this gives us a shift in mid time frame structure. If we go down to the 15-minute chart, we can see that. I'll just play this on a little bit more. So ideally, right, you might be looking at this and thinking, okay, where am I looking to, get long? Why is this denoted as an inside bar? That's not an inside bar. Very strange. Inside bar indicators having a bit of a problem by the looks of it. Anyway, so you might be thinking, okay, cool. Well, I'm going to take this range here, this sell to buy range, to look to obviously as a hedge. And then you think, okay, what is price doing? Right, we take the low, we take the high. Now you're thinking, okay, right, I'm going to look to get long from here, but it doesn't give a signal and it takes a low. So now you're thinking, like, what's happening here? But again, this is just another, form of that manipulation happening. So if we play price on right now, we've taken that low, you're expecting, okay, maybe we'll tap into this demand range here. Let's see what happens. Okay, so we fail to take that low at this moment in time. And what does price do? Let's zoom in a bit on this, okay? Okay, looks like we might be coming short. Okay, lovely, right? At the moment, we're respecting this high, so we might be able to potentially take this low into this demand level and catch our counter trend trade to obviously hedge the short that we're in. Oh no, look what happens here. Again, that manipulation happening, right? We take the high, we take the low, we take the high. If this was going to continue lower, you have to understand that this high here should have held, right? We give that high, low, right? High, low. This should hold if we're going to continue lower. But you see, we just wick it out here, right? Okay, let's see what happens. Oh, look at that. Now, what information do we have? So this internal high failed to take out this low to give us that new internal structural leg, right? And instead, we took out, obviously, this high. So what this can tell us is potentially now we are seeing that confirmation, that shift, that we are going to continue up. So what can we look for here? Well, one, for our entry, we need some form of in-range liquidity, which we have here, right? This is our range. It's a sell to buy, right? Before this high goes, it's also the first point of liquidity in the range. We have liquidity beyond every low and every high in the market. So we know, yes, this is a very minor low. This is a perfect example of inducement. So now this wick is sort of the only thing that stands out to me. And, quite clearly we tap in and we can get that nice entry. I'm not going to go into obviously the lower time frame stuff. I'm saving that for a rainy day. And boom, right? First target, obviously this high. And we can then look to take maybe say 50% partials and potentially hold this much further. So you can see we absolutely rock it on, giving us that lovely risk to reward ratio. Very simple sort of process that we followed to understand the manipulation that's going on in the market, and obviously how we can get involved in that and read the price action. Anyway, that's kind of it. I hope that you understood, and if you didn't, drop a comment if there's something you'd like me to go into further. Yeah, and just hit that subscribe button.